How do you make money in this market, protect against volatility, and protect the money you put in there in the first place, get some return to go with it? Joining us from Houston is James Shelton, the Chief Investment Officer of Kanaly Trust. He likes growth cap stocks, large growth stocks. And I want to ask you here, James, how are you protecting yourself against volatility right now?
Well, one, we're being very, very cautious right now. We see a lot of risks in the market, and so we're trying to keep everything pretty close to the vest. So we have a fair amount in asset classes that are outside of the equity markets. So we've got short duration fixed income as well as alternative asset classes to help protect the portfolio at this point in time.
Yeah, it's interesting to see some of those alternatives you're investing in. I know you like Master Limited Partnerships, MLPs. Speak to me about why you think this is an effective place to put your money in an environment where in Washington they're debating over whether or not to change the tax rate, particularly on commodity-based corporations who often use MLPs.
Yeah, that is the key risk, that there's some sort of tax change, although at this point we think the odds of that are very, very low. But we like the MLPs because they operate very large pipeline networks. These are stable cash flow generators. They aren't impacted too much by what's going on in the economy, and they pay very nice dividend yields. And we think investors are going to be looking for higher dividend yields in an environment where Treasury yields are so incredibly low these days.
Yeah. You also like mortgage-backed securities.
That's right. We like two different types, and we're really looking at high-quality mortgage backs. So we like those that are guaranteed by the government. We think that those represent a very good deflation hedge. If the economy goes into recession, we think those will perform very well.
What does that mean? Anything owned by Fannie Mae, Freddie Mac?
That's right. That's right. And Ginnie Mae's. So they're government guaranteed. We also like the higher quality end of what we call the non-agency mortgage-backed securities. These are mortgages issued by banks, but they are to higher quality borrowers. We're not talking about subprime. They are trading at very attractive valuation levels these days. And if the economy does pick up, then those would represent a very good inflation hedge. But I think it's very important that you hire an expert manager in those securities, and that's what we've done for a portion of ours.
Right. That's not something you do on E-Trade for yourself there, right? Tell me.
That's exactly right.
What's the percentage breakdown that you have there, the cash versus MLPs, mortgage-backed securities, some of these other alternatives?
Right. We have about 30% of our portfolio today is in equities, and then the rest of the portfolio is really split between fixed income, alternatives, and cash. We're running about 15% cash in our portfolios today, that we're just keeping that powder dry for what we think we might get some better opportunities in the equity markets.
And when you are talking about those better opportunities, you're expecting some down days in the month ahead. I mean, when are you buying?
Yeah, well, we think right now, if you look at the equity markets, I would say that equities look fairly attractive if we don't go back into a recession. But I think that the recession risk is definitely rising, and I think it's 50% or higher today. And so if we do go into a recession, then I think earnings estimates are way too high, and that will precipitate more declines in the equity markets. So we're just waiting to get some additional data to try to make that decision.
So next week's Fed meeting, will that be the kind of introduction of data that would make you become a buyer?
I don't think so. I think the Fed right now is kind of grasping at things. We have very low expectations for any kind of Operation Twist and kind of the effectiveness of that. And remember, Bernanke was talking about core rate of inflation around 2% would be kind of their target. And you know, in the data that just came out on CPI, that's exactly where we are at 2%. So I think the Fed is really going to be giving just more symbolic moves and kind of talking about the actions they might take.
All right. James Shelton, CIO of Kanaly Trust, joining us from Houston this morning.